Hi guys, it's Doc Curry, and while I'm traveling without internet access, I decided to take this opportunity to highlight some smaller YouTubers. Today, I've invited Noel Lorenzana onto the channel to talk to you about wash sales and what to do if you happen to have lost more than $3,000 last year. Noel is a registered certified public accountant. He's a registered CPA, and he has some incredible insight and knowledge into how wash sales work, as well as how wash sales work with options. And he's also going to tell you what to do on your taxes if you happen to have lost more than $3,000 in 2022. Without further ado, I want to welcome Noel Lorenzana onto the channel. And if you like what you hear, there is a link to his YouTube channel down in the description of this video, as well as the first comment below. Welcome, Noel.
Scott, thank you so much for having me on your channel today. I'm delighted and honored to be here. Hi everyone, my name's Noel Lorenzana. I'm a CPA, and today I'll be talking about the dreaded IRS wash sale rule as it applies to stock and options trading. Also, if you happen to have stock losses from last year, I'll show you how you can offset some of those losses against ordinary income to reduce your taxes when you file your tax return. Now, this information is general in nature. Please be sure to seek a tax professional for your specific situation. As you all know, this has been a rough year for investors. The Dow and NASDAQ were down around 10% for the year, the S&P down 20%. The good news is that you probably won't be facing large capital gains and having to pay taxes on them like you would have in previous years. And you're probably sitting on realized losses for the year, which you can report on your taxes to reduce your taxable income. Allow me to explain. If you own a stock investment that has gone up in value, then what you have is called an unrealized gain. The gain is unrealized until you sell the investment. When you finally sell a stock investment at a gain, then what you have is a realized gain. Conversely, if you have a stock or option investment that has gone down in value, then what you have is called an unrealized loss. The gain is unrealized or not yet realized until you sell the investment. When you finally sell the investment at a loss, then what you have is a realized loss. You can use these realized capital losses up to $3,000 per year against regular or ordinary income or to offset realized capital gains. In other words, capital losses can be used to offset ordinary income up to $3,000 limit per year. In addition, losses not utilized can also be carried into the future and used to offset future capital gains or ordinary income subject to the $3,000 limit per year. It can be a bit complicated to figure it all out on your own, so that's why I always recommend working with a tax professional. Let's look at an example. Let's say that you purchased $50,000 of Tesla stock, then sold it later for $20,000. You would have a $30,000 capital loss. Let's also say that you have a $15,000 capital gain on Exxon stock. The gain and the loss would offset on your tax return. The $30,000 loss minus the $15,000 gain still leaves you with a $15,000 loss. In this situation, you could still take a $3,000 capital loss in the current year, which can be used to reduce your ordinary income. There's $12,000 remaining, which would carry over to the next year. This is how it would look on an actual tax form. Form 8949 to be specific. Over here, you can see the details of the Tesla stock sale, which generated a $30,000 loss. Over here on the next line, we have the details of the Exxon stock sale, which generated a $15,000 gain. The net result is a $15,000 loss, as shown here on the bottom of the form. And this also carries over to Schedule D, page 1 as shown here, and also on the top of page 2 as well. Do note that on line 21, only $3,000 of loss is allowed. The balance is carried forward to next year. So this is basically how to report your stock losses on your tax return. If you self-prepare your taxes using TurboTax, then the software will import your transactions and hopefully figure everything out for you correctly. Just know the mechanics of how it works so you can check the software to ensure it's calculating things correctly. Another big area for confusion is around the IRS's wash sale rule, which happens if you sell a stock or option at a loss and buy it back 30 days before the day a transaction occurs or 30 days after the transaction. If you do this, then the IRS would disallow the loss. So the time frame for the wash sale rule is actually 61 days. The day of the transaction plus 30 days before and 30 days after. Keep in mind that the intent of the wash sale rule is to prevent investors from claiming artificial losses from the sale of stocks or options while essentially maintaining their position in the security. Does that make sense? If it doesn't, let us know in the comment section below. This is how it would appear on your 1099 tax summary. So here we have a 1099-B, proceeds from broker and barter exchange transactions. Down in the middle, we can see the stock Mind Medicine, MindMed Inc. So this person was engaged in lots of transactions that triggered the wash sale rule. And you could see this going across. The first line, they sold 50 shares. The proceeds were $157.49. The cost basis was $196.95. And the last column, there was a loss of $39.46. But you can see that the column before that, wash sale loss disallowed, was the $39.46. So for whatever reason, they had lots of wash sale losses disallowed trading this stock. So they had a total wash sale loss disallowed of $596.31. Basically, the wash sale rule prohibits selling an investment for a loss and then replacing it with the same or substantially identical investment 30 days before or 30 days after the sale. If you do this, the IRS would disallow the loss. But allow me to clarify. Lots of people think that if this happens, then the wash sale's disallowed loss is lost forever. This is a common misconception. What actually happens is the loss is temporarily disallowed, but it's not lost forever. The loss amount or disallowed loss gets added to the basis of whatever identical stock or option you purchased that triggered the wash sale rule. So when the second identical stock or option position is later sold, the disallowed basis is added to the identical stock or option basis. So that's when it can be taken as a tax deduction. Therefore, the original loss, you can think of it as just being deferred. I hope that makes sense. It's a little confusing at first. Let me know in the comment section if it doesn't, but this will help. Allow me to demonstrate with actual figures. Let's say that you purchased 100 shares of Disney for $150 per share. A few months later, you sold the shares for $100 per share, and within 30 days bought 100 shares at $90 per share. In this case, while the loss of $5,000 would be disallowed by the IRS because of the wash sale rule, it can be added to the $9,000 cost basis of the new purchase. The new cost basis for the second set of 100 Disney shares would then be $14,000. That is $9,000 plus the $5,000 wash sale disallowed loss. I know what you're thinking, this is way too complicated and I don't have any time for that. Well, don't worry, because your brokerage company automatically handles all the math and basis tracking for you. If you're not sure about it, you can always verify with your brokerage company as to how they handle wash sale transactions. For options traders, the rules work the same way. For crypto traders, you're in luck because currently the wash sale rule doesn't apply to cryptocurrencies, but that may change in the near future, so consider subscribing to mine or Scott's channels so you don't miss any important updates. That's all I have for you today. I hope you all enjoyed the video. I'll hand it back over to Scott in case you wanted to add anything. Thanks again for having me on your channel. I hope to see you all in another video. Bye for now.
I hope you got a lot out of Noel's message. Once again, if you like his content, there is a link to his channel down in the description of this video, as well as the first comment below. And make sure to comment down below. Let us know what you think about Noel's content, if you'd like to see more content like this on this channel. And make sure you go subscribe to Noel's channel. Don't forget to hit the like button and subscribe, and I will see you in the next video.